Realize that I'm a long-term investor, and right now I'm just trying to narrow down my stocks so I can just focus on having a more diversified portfolio and continue investing in the stocks that I know is guaranteed to bring me long-term wealth.
We adopted this I guess process, and us all adopting a stock that we're responsible for reporting on. So I gave you those outlines of what to report. I don't know if you could look at something in your portfolio and just looking at your portfolio, you had some interesting hot stocks and growth opportunity stocks. So what I'd say to that, and this is kind of like what I wanted to throw out to everybody, like looking at your portfolio now, especially at the start of the year, and seeing, does it represent you? Are there stocks that you don't know about? If someone just, came up to you and like, tell me what's in your portfolio, could you riddle off those companies, the background on those companies, and does it reflect your identity? Is it the things you buy? Is it the companies that you really respect and you want to be a part of, you want to take ownership in? So that's kind of a way to look at it, Kev, especially you as starting. And you'll see things become autopilot. When you buy good companies like that, it's going to be that long term. You're not going to be chasing the market for those instant profits. So I'll jump off my stock that I picked, the very good food company, and it's a company that focused on vegan products. They started out with cheese. They're based in Canada. I have about 200 shares, bought it at $5. It jumped a little bit and it's stagnant now. So I think it's like 1% down. It's like $4.58, but I'm going to hold it. I'm going to make the first decision on what I'm going to sell in April after they're building a 20,000 facility in California. So after that should be built and up and running in April. So I'm going to make my decision on what I'm going to do long-term, but I am looking to hold it for a year to 2 years. The earnings for the fourth quarter is going to be in March. So that's going to be right before they build this facility. So excited about just to see how it develops and how it grows from there. So that's my speed dating, if you will, recap of my stock. Whoever's ready and want to jump in before I tag somebody that's not ready, feel free to speak up and give their feedback.
I'll just jump in.
Go ahead.
I'll jump in.
Go ahead.
Yeah. You know how it is when somebody gives like a phenomenal speech and then you don't want to follow them. I don't want nobody to give a phenomenal overview and then I have to follow them.
So right? Well, we just answering those questions. Just how many shares you got, when you intend to sell, growth opportunities, anything else you want to share. Just make it quick, short, and sweet.
Right. Oh, good. Because that's what I got. So my stock is called Grow Generation. It's a hydroponics weed stock, but it sells hydroponics, which is like soil-less stuff for growing weed, basically. And so they've been coined as the Home Depot of weed growing. And so it's not necessarily like going to be as affected as other weed stocks might be. But since I've had it, I've grown it. It's grown for me about 24%. I only have 19 shares. Right now. I've been looking for the opportunity to average down, but sorry about that. It's only been going up. So that's a good thing. Like I said, in the last 3 months, it's going up 93%. And since I bought the stock, they've acquired 2 more locations. They're trying to have at least 30% more stores in United States within in the year 2021 and in Canada. So currently they're in United States and in Canada, and they just keep growing and acquiring. In January, they just acquired a new store in California. So they have 13 businesses in total in California.
Good stuff.
Okay. When will you sell?
When do you plan on selling?
Oh no, I don't plan on selling. I actually plan on keeping this really long term because until we find out what the Biden administration's plan is for not only wheat stocks, but like I have another big one like for electronic vehicles. So I'm like in those two realms, I'm trying to figure out where his administration is going so that I can figure out what I'm gonna do with those stocks. So no, right now.
Got it. Who's next up? Who you tagging?
I'm gonna tag Will.
Plug Power got its earnings on Thursday. Plug Power, for those who don't know, they provide clean, renewable energy called fuel cells. It's basically hydrogen power instead of electric power, hydrogen power, clean water. I own an option for it. So I sold my shares and bought an option, a long-term option, a year-out option on it. And the goal eventually will be to convert that option into the shares. So that's 100 shares I'll have. What's the other ones? Looking at the questions.
Just when you intend to sell. And
When do I intend to sell? I plan on holding this long term. Renewable energy is just in its infancy stages, so for the next at least decade, I'll hold on to it and see what it does.
And you made some money already, right? What's the growth? You made some money already. What's the growth since you?
I mean, the growth has been tremendous. I've been on it since it's $12. It's I think last time at closing it was $56.
Nice.
It had a bad week and it dropped quite a bit. It was trading around 65 at the beginning of the week. It's down to 56. But when I sold my shares and bought the option, it was at 55. So I'm really at break even right now. What I'm doing now to make money off of it is a strategy that I hope to get you guys up to speed with. It's called cover call. So as you own the option for long term, you could sell an option and collect a premium on it every week or every month. So you're making money off of it while you're holding the option. But that's it. Earnings is on Thursday and expecting big numbers.
Who you tagging?
Who ready?
Now I'm still looking stuff up though, so I ain't ready. I'm gonna keep it true. I'm still looking stuff up though.
Vicky unmuted herself, so I'll tag Vicky.
Yeah, my stock pick is my Roku. It's a streaming video company. I have about 5 shares now. I'm up a little bit. It's kind of probably would most likely say it's kind of at its high in a sense. I haven't, my percentage rate wasn't that much because I had accidentally sold it. Then I had to buy more shares, but I had did pretty good. And it had a pretty good fourth quarter. And it seems to be growing pretty good. And I think I'm going to hold on to it for at least a year to 24 months. So keep you all posted.
Good stuff. Good stuff. Who's next up?
All right, I'm gonna jump in. All right, my stock pick that I got is Zomedica. I got how many shares of that I got? Let me see. I got 3,500 shares of that. I got it at 98 cents. It's currently at $2.33. So I'm up a nice little bit in that. It's about
what's the stock ticker?
ZOM.
Oh, okay.
It's based in Ann Arbor, Michigan. It's a veterinary and health company creating products for companion animals, canine, feline, by focusing on the unmet needs of clinical veterinarians. There's a Zomedica's product. I'm reading off of something else. I'm just freestyling right now. Zomedica's product portfolio will include innovative diagnostics and therapeutics that emphasize patient health and practice health. So it's basically just like, just helping veterinarians and like animal doctors and stuff like that. Like instead of like doing so much procedures and surgeries and stuff, like they having like building technology to kind of like diagnose the animal without having to put them through any type of harms and stuff like that. They have they just did a collaboration, if I'm not mistaken, with True Forma, and they have a event coming up March 30th. So that's gonna be big. So I think that's why I started rising up. I had it for a little minute now, probably say like early January, and then I don't know where I got the information from, but I was just, freestyle, and I got the information on that. So that's what made me jump into it early, knowing like, all right, they got some big coming up March 30th. So I guess people started catching on to that now. So that's why I kind of ran up from like, it was at first, when I first seen it, was at like 85 cents. And then it was going from like 85 to like 95. Then I got it. Then it started going up. So I was trying to average down more on it, but I can't average down because it's not going back under $1 though. So, but
now let me ask you on that one thing, because great that you're picking a company for the sake of participating in our adopted stock. But,
okay.
But now that you're at this point of picking a company, like unless you're into pets and veterinary, like what are you like? I picked the Very Good Family because I'm really into healthy, clean eating and everything. So
Okay.
If you're picking it from the standpoint of growth, it seems like you did more than 100%. That's great. You're winning. But if you want to adopt something that reflects you, that you are not, and that's not a rule per se, but I think it would help for you to be really excited about the stock. I don't know if you're excited about Zoom, like I said, based on the growth of it,
okay,
or it just being a stock that sticks out in your portfolio. So
all right, to piggyback off of that, I could say like, well, since you mentioned it like that, I had a cat that passed away not too long ago, probably like a couple years ago, and yeah, it ate something and got tied up in the intestines, and I brought it to the veterinarian, and he was basically saying like they will have to do surgery on it, but there's 9 out of 10 times that there's a chance that the cat might die because it's the string that they ate and stuff like that. So,
wow.
Like, yeah.
That's good. So you answered my question. I just wanted to throw that out there because I think it's important to my original point, when you start getting a portfolio that you're really happy about, especially when you're reporting on a stock.
Yeah,
so,
one of my good friends that that took the pictures of me and my daughter today. He's a photographer, but he works at a veterinarian. He became a manager, so he's passionate about cats and dogs and stuff like that. And I helped him get that job by helping him fill out the app for Indeed and stuff like that. And he had a cat inside his house that he was actually doing procedures on and stuff like that. When the cat
you good, Kev. You good. You already answered the question. You don't need a dissertation.
Elaborate for me.
He's like, my cousin and my uncle was a vet too. And I'm gonna try to go to school to be a veterinarian in the future, so that's my stock, right? And I'm sticking to it. No, that's good. Actually, good to know. It's good to know. It's good that it's not
okay.
I think that's just gonna add your excitement and just your overall engagement in that stock. So it is something true. But you are at 100%. So start looking at when you're gonna sell, like and putting those measures in where you're taking, you're retaining your growth. So
okay, I have a
Okay.
question. It's more to Terrell because I have Zomedica too. I had it since I bought it at 68 cents.
That's what's up.
I don't have 3,500 shares, but I think I got like 200 shares, and I think I made over 100% of my money too. It's just that I'm looking that it keeps on, like he mentioned that on March 30th they have something coming up, and it keeps growing. So I keep on trying to figure out ways to make sure. I know the trailing stop. I know we've discussed this, and I know that's why Terrell's making that face. But like, I keep on trying to figure out ways that I can put more in, but without my cost going up. But of course, my cost is gonna go up. Then you know what I mean. I believe in the company, and I want to stick with it. It's just that I'm not as excited because I'm not gonna become a vet, and my parents ain't a vet, and all that other stuff either. But what would you have to say to that, either of you?
I'd say it's all related to your goal, right? Like if you have 20% of your portfolio that you're investing in these type of stocks, because penny stocks are like that. They have the ability to jump crazy, and you can make some quick money, even only having 200 shares. So you can hold out for that, but if you're staying in the lane of taking profits first, you still want to manage every stock that you have in a way where you're retaining those profits. So if the company does dip, you're going to retain that 100% of whatever growth, or at least the most of it that you have. But it gives you a sense of, if you're not going to hold it, you got to pay attention to that, because like Vicky said, she had Roku at a low price. She put a trailing stop in it to protect her growth, and she got that growth. But Roku is just still strong. It's one of the strongest growth stocks in the S&P 500. So it's just growing, growing, and growing. A penny stock is not the same. It's more volatile. So to your point, I would say you got to decide how long you want to hold that, but also put some measures in where you retain those profits. So I'd say even if you put a trailing stop like at a 25% loss, that means that $2 stock would have to go down to $1.50. If you bought it for 68 cents, you're still almost tripling your money. So that's what I would say to that. And
if you're not passionate about it, just remember there's a million other stocks. Don't let FOMO hit you, take your money and move on to the next one.
Yeah.
Good. But word through the grapevine, I heard it's gonna hit like $15, $20 though. That's just through the grapevine that I heard. So I advise you just hold on to that from my perspective though. Like that's just the grapevine.
So on that note, and I think out of all the stocks that we have, if that's looking like it has the most growth, and you and I, Kev, we can look at it. I wanted us all to hop on one particular stock, and I'm not just saying that to pick and outline Zomedica, Zomedica. I think that's the pronunciation of the business. But I would like for us all, I'm not sure if we're buying, because the whole point of this report of stock is that you're conscious of what stocks are doing in this group. So if Zom is not the play, we should start looking at what's going to be that stock that we're all going to jump on.
What's the ticker for that one?
ZOM. ZOM.
Zom.
Yeah. So I'm gonna welcome Rob. Rob, I see you look
my boy.
Rob, what's good?
Yeah, my background is a little loud right now.
Yes,
but I didn't want to miss it.
Wait, how do you get the video? How do you get the video?
I think
at the bottom, at the bottom, right next to mute, it's gonna say stop video or start video.
Oh, start video, okay. Hold on, let me see if I'm in the building. Oh, I'm in the building. Hold on. I'm in the building. All right, hold on. All right, we here.
This is first time on
Say that again?
It's your first time on Zoom?
Yeah, that's my first time.
It's my first time. So, like I said, I'm actually currently out to eat right now, but I didn't want to miss it. That's why I just tuned in and just muted it.
Appreciate it, Rob.
You know what I'm saying? So right now, I'm just taking notes.
Got it. So
right now I'm just taking notes.
I cut Rob off, but we were talking about our adopted stocks, and I don't know if you got my text earlier. Pick a stock in your portfolio that you want to report on those specific aspects. How many shares you brought, how does it make money, all of those key factors that gives us a nice awareness of the stock. So if you don't have one, you can take your time. But Rob, yeah, you. I'm sorry, I didn't keep.
Yeah, I'm here.
Oh, you can do that now. I don't know if you want to ask you the question if you pick the stock.
No. Actually, I haven't picked a stock. The only stock that I have that I'm actually been confident about so far is the CCIV, but I haven't done enough research to break down the details. But the reason why I jumped into it at like $15, and then I made I forgot how much profit I made. I think I made about $400 profit. I sold it, and then I jumped back into it when I heard that they were supposed to be doing the merge with the Lucid Motors company. And I jumped back into it at 1997, and I got 115 shares of it. So right now, I don't know I haven't checked the percentage actually that I'm up, but I know I'm up about $4,000 so far. Nice. And like I said, this was just all speculation. So that's the only stock that I'm actually really confident about, away from Tesla. But that's cliche.
So what we were talking about also with those adopted stocks, like let it be something that you're really in tune with. So if you're into gold, you know, for example, I see the change. I'll mention that if you're into gold, it should be a gold stock, you know. So we want to get a sense of not just pushing your portfolio to a way where you are more connected to the stocks, but just something that you really are passionate about, and it's not just something you pick out of your portfolio.
All right. So I have a question, right? As far as like starting from scratch, looking for stocks, how do you do that?
So we talked about that about 3 weeks ago before we went on hiatus, and it's a couple of ways you go about it, you know, through the technical kind of research, but it's really about, like I said, common sense in investing, right? So you want to look at where things are going and do your due diligence on those stocks that are leading those industries. So as we mentioned right before Biden took over administration, you know, we are waiting for this Green Deal. We know that more, so green energy is going to be a great industry to be a part of. So you start on that big kind of macro level at where things are going with marijuana, where things are going with telecommunications, and then you do your due diligence from that aspect. So some of the websites is Seeking Alpha, of course, Yahoo Finance, and we talked about this also before, weighing through all of the speculative articles and just getting stock tips versus looking at finding some of the strong stocks in those areas. So take a step back, how I would start on green energy companies off top. When we started talking about that, we already, luckily, Will on this call was already involved or had his eye and done enough due diligence on Plug, which is an EV stock. So it was great for us to use that as kind of a comparison on stocks within that sector. But when we started doing the research and kind of going back and forth, fuel cell became, you know, one of the leading. These companies, the advertisement of these top companies are already hitting you, whether it's through Motley Fool, Investopedia. You're going to hear about some of the top companies, and from there you have to do your due diligence on, you know, what's going to be a long-term play. And I think offline we can have a conversation about assessing the stocks, but it starts from the top. What's the trends that's going on? Do your due diligence, whether you're using Google or any type of research platform or online tool, and then you go from there and breaking down and doing the comparisons. So if anyone wants to add to that in terms of their specific style and in researching the company, we could dive in deep. But also, Rob, what I say, you and I can have an offline on kind of picking, because it's one thing of getting the information on stocks and deciding what are the factors to decide whether you should invest in that stock. That's the next piece to it. So we got kind of sidetracked. I think Kev was going over his when we started going back and forth, and then Ty, I think you asked a question about ZOM, and then you had a question, Ty?
You said I do. You said we could go offline and answer that guy's Rodney, I think his name is, question, and or Robert, sorry. But we all are pretty much new investors. I mean, months, maybe even a year still makes us a new investor. And although I kind of get a grasp on a lot of things, I don't think it's a bad idea, since you're the most senior investor of us all, to kind of get a sense of how you go about that. You didn't know about ZOM, for instance, and it has gone up quite a bit since we've acquired it. I got mine like in December or whatever at 68 cents. So like, if you would want to share your screen one week and go through your steps of how you do your due diligence, that wouldn't be a bad refresher for some of us who might, you know, maneuver differently. Because I honestly, sometimes I'll hear a top tip from somebody, read something on maybe Seeking Alpha or Yahoo Finance and be like, oh, that's a cheap stock, let me just buy it, a few shares of it, hope it goes up, sell it when it does. You know what I'm saying? I don't really have any kind of big, you know, thing that you got going on.
I agree.
what I'm saying? It
computers.
sounds like
I look for what's on sale. That's what I be doing.
Well, I think, see, and that's the approach. So that's it. I think, and this is what we always talk about. So being a speculative investor, that sucks you in. That's gonna get you. Everyone has done that. I've been in that way when I first got into this. And I told you the story offline. When Facebook came out, it was kind of like, oh, that's it. I had a colleague that was always talking about Apple stock for 15 years, and he probably made a good $500,000 off of Apple stock. He's been talking about Apple stock for so long. And then it wasn't until Facebook until I started to realize the IPO was in 2012, and they had the same thing that happens when a stock is delivered. So I got into it, but my first year, Todd, to your point, I was a little speculative. I was taking tips and like, oh, I'm going to invest in this. And then it wasn't until like a year or 2 years later where I'm like, why am I buying these random companies? Why am I not just buying the companies that have solid, that have a solid business plan? They're progressive growth. When you look at their 52-week, when you look at their 2-year, 3-year, it's progressively growing. So I think when you start chasing the market, and it's great to have these companies, but what I would say is what I always said, use 20% of your portfolio for those type of risky penny stock investments and just flip it that way. But have a goal for it. If you have $1,000, if you have a $5,000 portfolio, 20% is $1,000. If you're using that $1,000 to invest in companies like Zom or Peer, whatever penny stock that you're interested in, you have a goal for it. So if you want to take 500 of that $1,000, put it in Zom, you made your $500. Now you're playing with house money. So you pull out what you can and you start, and that's how you really start building a nest egg. So that's really my strategy. But I try not to reinvent the wheel, because we said this on a call 3 weeks ago. You can really, it becomes daunting. It's like being on Instagram after 5 minutes and getting all types of, your search engine is just random people coming at you. And that's the way it is with investing. So I'll definitely do that, Todd.
Can I jump in with less words and just say, Rel's at a point where he doesn't need to chase a lot of these stocks that are popping off. They're speculative. So he's taking a less stressful approach. He can invest money in Apple or Square and stuff like that, and won't have to stress about it, because Zom is really, even though it's popped since and just like Plug, that was $2 last year and now it's at $60. They can all they can turn into a legit stock, but right now it's not legit. It's still speculative and still rising off the speculation. So at a certain point, once you get your portfolio, and everybody gets their portfolio at a certain point, you don't have to take as many risks. But it's good to take the risk while you're young and you can recover and stuff like that. And then once you get to a certain level, you can just put it on cruise control and just invest in blue chip stocks and don't have to worry about it. You'll see growth, and you'll have enough money where you put enough money in, and you'll see.
Well, you hit mute. You hit mute accidentally. If that wasn't little guy that did that.
I was done. I was actually circling around anyway.
Yeah, but good point though. And I think, Todd, let's definitely do that. I think we should definitely go through that process, but that's a good point. So where we left off, Daniel, I think it's your time to do your speed date. I think you up next. You've been quiet and stuck into the room.
Appreciate it. So I have Blink charging.
Yeah.
And I only have a few shares of it, because I got, obviously I'm fairly new to it, so I didn't grab too much. I grabbed 5 shares of it, but it's done well. I think I got it when it was at 29. Now it's at 46.
Nice.
So I think the only thing that kind of has been in the news with Blink, I think I shared it with folks kind of maybe a couple weeks ago, was when the CEO shared. I think he sold like 500,000 shares. So that was the only thing that was kind of, I guess, speculative about, not speculative, but just, I guess, something that was negative about, the stock itself. I know also I found a good article, like I sent it to the group as well, about this charge point, because I know they're in the process of trying to merge with Switchback Energy. I know those two are kind of, from what I'm reading, is kind of two of the most prominent EV charging stocks. So Blink is an EV, electrical vehicle charging stock. So those two are kind of neck to neck right now. And the article I found was just talking about how they feel that Charging Point may have an edge over top of Blink, just because of their business model. And obviously some of their earnings this past year as well too. So I intend to hold on to Blink for a little bit longer, probably for maybe about a year. Kind of see how things go, but it's always good to kind of just know the market and know some of the competitors and what's going on with that stock. So
Got it. Good stuff. Good stuff. Who's up next? Natasha. I know you was jumping. You tried to. You had fuel cells. You adopted.
Yeah.
To get rid of them, leave them on a doorstep somewhere. Tell us what's going on.
Yeah, I was about to give up my stock for adoption, but I decided to stick it out. And I just have 15 shares of fuel cell. And what I actually had 28% growth since I purchased it, because when I purchased it, it was $15 and it went up to $26, but then it went back down. It had like a bad week last week and it's now down to like $20. The stock itself had like 10% growth. I probably would sell it like in a year because it has so much competition, and I also have Plug. So being that they're both very similar in regards to clean hydrogen power, I'm gonna just probably hold it for a year, see how, see what it can do, and just probably sell it and just keep Plug, or look for an ETF that has both in it and just focus on that. But yeah, that's what I'm gonna do for now. I'm just watching it because there's so much competition going on right now. So like with Bloom Energy, it's Plug, what else? Plug is about to go into some type of venture with Spain. Do you hear about that, Will?
Well, that's your stock. He's talking about Plug.
Plug stock, yeah. Did he hear me? Okay, I guess he didn't hear me. But anyway, Plug is doing pretty well, and I have Plug too. So again, I'm gonna keep it for a year.
Got it.
See how well it does, but my plan is to get rid of it.
Got it.
Yeah.
Tracy, I think you're the only one that.
Natasha, I have a question. Natasha.
Yes.
So I have two, and
you're cutting up. You're T. You're cutting up.
Well, I think
you're going in and out.
Too.
Go ahead.
I was saying, like, I have fuel cell also, and it did have a bad last week, and but I see that it's kind of recovering. Do you know what is it? It's just speculative, right? Like that, the reason why.
And then remember their last.
So, and it does have a lot of competition.
Exactly. And their last quarter, what they expected to make, they did not make. So the next report is going to be in March. So just look out, like March 12th, I believe, is going to be their next report. So let's see what happens from this point. Hello?
Yeah.
Yeah.
Hey, take us home on the stock recap.
Good stuff. You broke up. Ralph. Tracy, I think you're the last one.
Take us home on your stock.
Oh, can you hear me?
Yeah, we can hear you well.
Well, you and I discussed Slack, but I don't want Slack.
Okay.
And I want Adobe because I'm picking stocks and companies. I want to invest in companies that I believe in. I use their products and so forth. Adobe, I check its background. I mean, it's been steady for the past 5 years, like at $479. And it said Friday it fell some, but I have not purchased the stock yet, but I will. So I want to buy Adobe. Okay. And I want to buy Adobe because we all use Adobe, believe it or not. And it's not just about, for creatives. I mean, everybody uses Adobe every day. Just if they're doing any kind of business, you use Adobe or you're using Microsoft.
So that would be a long-term play. That would be That would be something that's like Roku.
Yes.
You know, a solid stock that you could invest in, put your money in, and use it like, you know, like your savings, if you will. Good stuff.
Yeah.
All right. All right, so let's keep it going. We got a little sidetracked, a lot of back and forth, but we want to keep it engaging.
Wait, Terrell, can I just say one more thing? I just wanted to give Robert a little advice as well. You know, just like T said, we're all pretty new investors. However, it's so much out there that you can get sidetracked and you want to adopt all these so-called sales. Just like a woman, sometimes we go into a market and we see something on sale, whether we need it or not, we'll buy it just because it's on sale. That's not a good thing, because you end up spending unnecessary money that you could put money into a stock that's actually going to grow no matter what. And then you could just focus on businesses that you really enjoy and businesses that you actually spend your money, companies you spend your money in. So that's been my strategy. I just focus on companies that I spend my money on, and focus on those S&P companies that I know long term, I'm gonna see a profit. I'm not focused on, what I'm realizing is that I don't want to focus on short term, because with investing in stocks, you really see your money in growth. I mean, really see your money with those growth stocks. Yeah. So try not to focus on anything that just because it's on sale, because just because it's on sale doesn't necessarily mean you need it. That's all I want to say.
Very well put. And I knew I came on this call for a reason. Terrell has been saying, but the way you said it just infiltrated my brain just now, because it's true. I always,
right?
Yes.
You know how we are as women. And that's how when they were explaining, as soon as he said, I'm looking for sales, it just popped in my head. We all are looking for sales. And sometimes we buy things that we don't need just because it's on sale, but it's still a waste of money because you don't need it.
That's exactly how my portfolio looks. Like,
yeah.
People that I follow on YouTube, but they've been giving me some good plays. I feel like now is the time to get out of it, like Zomedica, Sundial, CLRB, Select Quote, all these things that I just have like kind of clogging up my portfolio. Now it's probably time to get money off of it to get out of it.
That's right. And put it into something that you know your money's going to grow.
Yep.
And the point that I didn't want to lose on that, if it's 20% or 25%, whatever you feel comfortable with, if you're using a portion of your stock, just be aware of that portion and know that that's your play or your aggressive portion, and the other stock you're moving like Warren Buffett. You're treating a long-term approach. So just to keep moving, the vocabulary stuff is key, and I hope everybody got a chance to look up some of those vocabularies. We put in float. Float is important because it's good to know, especially when we're talking about penny stocks. So most penny stocks generally have a small float, and that's the available shares to the public for them to buy. That's the shares that the executives and the institutions, the banks that either brought that IPO to public or invested a large portion of money into those stocks. The float is what the public has to buy. So when stocks have low volume and a low float, that's where you get a little like, oh my goodness, this is when it becomes not just if it's speculative, it becomes more of a volatile, risky stock, because anybody can move a stock. Like there's stocks now that us as a group, we have 75 people all in the chat. We can move a stock up if we all put a certain amount of money into it, a stock with only 15,000 or 50,000 shares in volume on a daily basis and a low float. So that float is important. I think it's bigger, it's more important in the context of, again, how many shares in total that company has available and the volume, the average volume. So
just to butt in really quick, everybody should be a little bit more familiar with float after what happened with GameStop. They were talking about float a lot with the GameStop thing. They shorted the float 140%, like way over how many shares that were available.
Same thing with AMC.
Mm-hmm.
Same thing with AMC. So, and I started teetering on volume is the other. Everyone pretty much knows what volume is. Bid and ask, bid is the highest someone will pay for it. The ask is the lowest someone would sell. So so it's good to know these terms and just be familiar with them. And I definitely wanted to be something that you guys, you know, take heed. At the very least, you'll become a way more knowledgeable investor. Just jumping on those vocabulary words and making sure you understand the definitions of it. So I'll turn it over to Will because he's been
Bid and ask. Yeah, real quick, just bid and ask. Just be sure that you type that down if you're interested in option. That's important.
So
yeah, so I can take over from there. Is premium. Premium is basically if you're buying an option, that's what you have to pay for the option to own that contract. That's the premium. If you're selling an option, then that's what you're going to receive for selling it. Buying an option and selling an option, get into in a second. But time decay is super important. So if you're going into options or whatever, all options have an expiration date. So if you think a stock will move within the next week, putting an option to expire on Friday, all options expire on Fridays. So if you think it's gonna move in the next week, putting the option to expire on that Friday will be the worst thing you could do, because by the time it comes to Friday, if that option didn't move past your strike price, which was a vocabulary word from last time, if it doesn't move past that strike price, it's gonna be worthless, worth way less than what you bought it for. So time decay is important. You want to always put your expiration date way past where you think it's gonna move. So if you think it's gonna move this week, put the expiration date for like a month from now.
Well, you want to show us that where you're going to pull up your cart, because you know, options is definitely the advanced class, but I think it's worth it for us to stay on, because it's a way to insulate. You know, it's hedging your bets, and really through options is one of the most secure ways in trading if you're not just jumping in companies like Apple and Netflix that just have a strong growth opportunity overall.
You got to think about it like this. If you're selling it, right? You bought this option on Monday and you want to sell it on Friday. Who's going to buy it from you if it expires that same day? So you want to give whoever you're selling it to enough time to buy it. All right. That's my those are my options as of Friday. So in the blue is start from the quantity. The negative ones are the ones that I'm selling. The ones that say 1 is the ones that I bought. So the blue circles are the blue circles next to the negative ones is what they paid me. That's times 100. All of those numbers is times 100 because it's 100 shares. And then the reds is what is worth. What is currently worth. The green is the expiration date. The green highlights is the expiration date. And the purple is the strike price.
So Will, the plug is the only thing that you owned before. These other companies, what made you pick these? I know IPOE was one that was surging last week, so I'm interested to know, how are you picking these companies?
All right, so IPOE is SoFi. It's a SPAC right now, and they're merging with SoFi. It's a financial institution, fintech.
Got it. That's a good
So
play.
so so what I did was I bought a long call, as you can see on the bottom. I bought a long call. That's the one I purchased. That cost what was it, 1,000? It cost me 1,000. And then I sold a short call on it for a month and made $130 on it. So that's called the cover call. The other one, APXT, it's Microsoft. It's a Microsoft service company. They manage the cloud storage on Microsoft. So it's kind of a cloud storage company. That one I found off of the YouTuber Chris Sane. I think one of you guys follow Chris Sane.
Probably all.
What's up, YouTube?
I know exactly.
Yeah, but he that stock hasn't moved. So you can see I only got $50 premium off of that. That's one of the stocks that he recommended. I bought, I followed them into it blindly, and it hasn't really moved that much.
I'd be interested on the cloud storage piece to figure out. We haven't really talked about cloud storage companies, but I don't know if that's the winner out of them. But we need to, as a group, just think about what's on, because cloud storage is just where it's at. People, there's tons of companies. There's so much money getting into it. Everybody needs storage, and everything is becoming more computerized. So that's a good play overall. But I was just asking about those specific companies, if there's a game plan on that. And that's good.
Oh, well, all right. So my game plan with APXT is I'm waiting for its merger. It's supposed to merge at the end of the first quarter. So the first quarter ends in March. So hopefully that it moves. But I've had it since like early December, and it hasn't moved much. I bought it at $13. It's at 14 now. So it's flirty. It went up to 17. That was okay. But it only stayed up there for maybe a day and then came back down. So I'm waiting to see after the merger if it realized potential and gains some traction and keeps going up. SoFi and Plug, of course, is going to be long term for me. AMAT is Applied Materials. That's a semiconductor company, which is a real hot company. A hot sector. They're in everything. They're in computers, cars, phones, semiconductors go into everything. So that's a sector that anybody that's looking could jump into. Just Google's top semiconductor companies. All those companies just keep going up. So I played that one short. As you can see, I made like $300, and I bought that one day. I bought it on Thursday and sold it on Friday. Its earning was on Thursday, so I bought it before the close on Thursday and sold it Friday morning.
Good stuff. Well, folks, as always, I want to be respectful. We generally go an hour hard. Will, thanks for the options play. And as I said, it's definitely a different way. It's like the advanced aspect of investing, but I think it's so important, and I'm glad, Will, you're diving in deep. I haven't even really dove into options as much, so it's good to see that folks are like, we can all learn from Will and really pick up things. It's an easy way to make money on the side betting aspect of things. Will, also, I wanted to know if you could pull up that graph, that algorithm, because I think it speaks to kind of the theme of what we were saying with managing your portfolio overall and looking at solid companies and from a long-term play as investing versus the speculative play.
I just shut down my phone though for the name.
Is it on your phone?
Yeah, it was on my phone.
Oh, okay. All right, I didn't want to cut. So let's jump into that next round next week, and let's put that on there, because I think it's key for us to start as we flip. And I would like for everybody to start focusing on building out their portfolios where it's like that, where you're excited about the stocks you own and you have a good percentage of your stocks just long term, where you're not looking at it every day and you're seeing the growth. over the year, because granted, we started this group at the top of downturn market, so you could have threw your money in anything and just watched it grow, but we all really got into the framework of chasing the market. So to turn that back around and get where our portfolios can grow on a gradual basis and not be out here Las Vegas in it, I think it's going to be exciting to see that. But Will, any context you want to give to that algorithm just before we show, because that's going to be at the top of the our call next week.
The algorithm is basically about risk management. They track the NASDAQ 100, which is technology stocks mostly, and it's all about risk management. So they trade off of the top 5 stocks they believe has the most momentum going behind it. So October, when Moderna announced their vaccine, that was one of their picks, and it was based off of the momentum that it already had. They announced it and the stock shot up. So they said jump into Moderna. When you jump in, they automatically set your loss at 10%. They give you a stop. They say if it goes to this number, get out. Because they don't want you to lose all your money. It's all about risk management. And then at a certain point, they tell you to take 20% of whatever you have allocated for the algorithm, buy that stock. Once it jumps to 20%, you take 25% of what you put in out, and then let the rest of it ride. Then they put another target. Then they move up your stop loss, so where you getting out where you got in at. So they done that. I got in last year. I got in late last year. I missed their big ride, but they outpaced the index that they was following by about 20%.
That's where you want to be. That's where you want to be. Good stuff. So that's going to be a great way to start off next week and getting everybody in that framework. Before we go, any open questions on just anything for anybody? Well, good stuff, folks, man.
Somebody's talking.
It looks like that
you gotta unmute yourself.
Oh, what's that?
Yo, bro, you gotta unmute yourself, bro.
Oh, okay. I'm here. Y'all heard me?
Yeah, good.
Oh yeah, you might have to just run back them option plays again. I definitely want to jump into that though, but yeah, I was catching a grasp of it though, but it was just like you just lost me. Like I ain't gonna front. Like I was seeing you, and then you just got low. So what I do?
So anybody that's interested in options, I'd love to do it all together. Like Will, if you want to use your account, or I start getting in heavy, we can all do that together, like hands on, and make the
Yeah,
I'm down for that.
Yeah, that's cool. I'm down.
I definitely want to split up with that.
Options is a lot. The way I learned it is just straight up YouTube. I could post the videos, just watch, and then the YouTube videos is like 20-30 minutes. But when you start seeing, like even when I was just explaining, you see why it could be 20 and 30 minutes, because there's a lot of numbers there. You be like, all right, what's this number for again? What's that number for? And it's all of this is repetitive. Like I watch YouTube videos, it's telling you the same exact thing, but you need to hear it like 3, 4, 5 times for it to stick, because that is mad numbers.
Good stuff. Good stuff.
I'll post.
All right. So wait, question. Moving forward, right? Is it safe to say that we should all leave the short squeezes alone?
Absolutely.
Mhm.
I wasn't gonna call you and Rob. I ain't gonna call.
Nah. Listen.
I got jumped off the.
Nah, listen. You can call us out on it. I'd rather share our mistakes, so everybody else don't have to make the same mistakes.
Yeah.
Me and Kev, we jumped into the AMC during the short squeeze, and at a point in time, I was actually up $4,000, and I was getting greedy because I thought it was gonna do what GameStop had done. And let's just say today I'm down $5,000 and change. I bought 660 shares of it at $13 and change, and right now that stock is at $5. I'm down $5,000
I'm down like 3K right now too myself for that.
Oh my God.
It's terrible.
No,
terrible.
But I
feel nauseous hearing those numbers.
It is like vice versa with Bitcoin, because Bitcoin we jumped in at 38K, probably put a couple dollars on that, and then we took. It's like every time we take out, once we took out of it,
That's when they went back
Yeah.
up to 50.
yeah, 55.
Yeah, and
Yo.
then I'm not gonna lie. I'm glad I jumped into this because actually, like it's a lot of the stocks that you guys are speaking on, and I jumped in and jumped out. I made money, but I only made about $200-300. I was just thinking everything as a short-term play when I was actually trying to build my portfolio. Like I was just confused. I was all over the place with my stocks and in the stock market. Like it was certain stocks, like I have FuelCell. I done made about $300 and change and sold it, and it's still going up. I done had the APXT. I done made about $230 and sold it, and I just keep missing a whole lot of plays. And in some plays, as soon as I put my money in, it would drop to a point where I'm just thinking about it too much that as soon as I get my money back, I would sell it, and that's when it started running up. But I just jumped into it at the end of November. I just jumped into the stock market around like the end of November, so you know I'm still fresh to it.
That's happened to me too. It's all a mindset. When you chasing the market, it's coming at you.
Horrible.
That's good stuff.
Can I ask one?
But my biggest loss is the AMC though, right now. But I'm not selling it. I can't.
Yeah. It's just a paper loss. It's just a paper loss.
Until they file for bankruptcy. They become real.
I'm gonna blow up the movie theaters.
Don't worry, they gonna blow it up first. Start setting fire to their own movie theaters.
Can I ask
Tracy-
one quick question?
Tracy, go ahead.
Am I the only one still using Robinhood?
No, I still have Robinhood, Tracy. I don't use it as often. It's
No.
not a platform I use as often, but I still have it.
Okay,
Yeah,
'cause
I only
do
use
most of my
Robinhood for
portfolio
Dogecoin.
is on Robinhood. I have a bunch of stuff on Stash, but
Yeah.
Robinhood is where I have most, and I just want to make sure because I'm not doing what you all are doing. So I just want to make sure. Because my cousin Todd said, did you guys hear about another it's called WebBill? I think he said
Webull. That's what I
Webull.
use.
Yeah.
Webull. That's why I have most of my
we
money
never
in.
talked about that before.
Mm.
So is it like Robinhood, Webull?
Yeah, it's the
Yeah,
same
Webull.
way. I think the beauty of it is that they give you paper money. So they give you $1 million in paper money, and you can really, jump in on certain things and learn how to trade on that level.
Okay, well, I'm going to stick with Robinhood until you guys, because I read the WhatsApp chats every day.
They
But
broke, don't fix it.
it's because so many people, even when I'm trying to get people to get involved, they're like, well, I'm not doing Robinhood. I know you broke because of what happened with GameStop, but we all watch what happened, and it wasn't just Robinhood, it was the other companies too, but I don't know. I just want to make sure, but thank you. I have nothing else to say tonight. Thank you all.
Yeah. Nah, actually, I'm in a few of them. I have Robinhood, I have TD Ameritrade, I have Webull, and Cash App.
Oh yeah, someone asked last night. I meant to respond to them about Cash App. Is one of the doctors that follow she asked about trading through Cash App. I've never done it. Is anyone
Yeah, I
familiar?
got Cash App too.
Yeah, I have Cash App.
Oh, okay.
I got a good amount of Cash App. Cash App is just like instant, like you put your money on instantly, but it gotta be within the trading hours, like from 9:30 to 4 p.m.
Yeah, that's it. That's all they have. They have no pre-market.
They got no pre-market, got no after hours.
Don't leave that doctor hanging. Get on that group and respond to her.
No. Kev responded.
Okay.
Kev responded. And Cash App don't even have all of the stocks. It's certain.
Yeah,
There's a lot of stocks Cash App
There's a lot
don't
of
have.
stocks that is missing.
Yeah.
Thank you guys. Thank you for that information. Thank you.
All right.
Yeah.
But Cash App is definitely instant. Like you put your money on instantly, you don't gotta wait 2-3 days and all like that. It's instant. Like probably within a couple of minutes, depending on if you gotta verify, whatever the case may be. But your money goes on instantly though. Like it's from your bank account straight to the app. So and you can take your money out instantly too. So
It's like that with Stash too.
okay.
Yeah.
Look at Robert showing his money.
Oh, no, I'm paying that.
What you trying to show us?
No, I'm paying a bill. I'm actually out to eat right now. Listen, my money in AMC. My money is lost to AMC.
My money in AMC.
My money lost to AMC.
So guys, good stuff, man. Will, let's get that agenda out immediately again. Man, we were of course on hiatus with with Super Bowl and Valentine's Day. But let's if you have some time after this call, let's jump on and just go.
All right.
I want to show everybody the 15-minute trick. If you want to do this, I want to show everybody the 15-minute trick. So
the 15-minute trick for what?
15-minute trick so we can do some more AMCs? Come on.
No.
Oh, man.
People that's like,
Oh,
these folks that's looking to
We
steal
ain't gonna never hit the end of
chasing
it.
the market.
Never.
I want to at least show you how and make sure
Listen.
you're buying it all the way up.
No, listen.
Hold on, Ralph.
Listen. 15 minutes would have had worked. AMC was moving for 3 days.
Heard in the background, never.
Never.
No, so
I got you. I got what you're saying.
Is that when I was day trading 9:30, if you get on 9:30 and you wait 15 minutes, if the stock is giving you a pattern, you can't force it. If the stock is giving, you got to take what the market is giving you. When you see past that previous surge price, and you catch it right past that, all you have to do is put in a limit order for the price that it was. And so if it shoots up at 9:30, 9:35, it went from $4 to $8. It's gonna pull back to $6. If you wait till around 9:44, 9:45, and you place a limit order for $8. Remember, if it hits $8, it's gonna execute. If it executes, you're in good money, and then you can play the day trading game and take what you want from that growth. So I was gonna show people how to do it, and you can see it from. It'll be great to see. I'm gonna try to record me do it tomorrow morning, and have the video. Either we can make a video out of it, Will, or we can do it. We can like replay it and go back on next week's call. Because it really is the best way to enter trades. When you're thinking about something you want to buy, it's hot. All the speculation is starting to pour in around 9 o'clock before the market opens. If you play that 15-minute game, you'll be so set. You'll never lose money. You'll never lose 9.5 times out of 10. And I was doing it conservative. I only waited until the stock went up $1, took my earnings, and ran with it. So I want to.
Well, I'm gonna have to watch that because I was so greedy, Terrell. I was trying to do it without you.
The ledge. She didn't wait. She's y'all buying that. Wait. Oh my goodness.
Terrell, I lost $200. Remember the stock that I bought?
Yes.
So it went up, right?
Yeah.
And I made my money back. I made like $200, and me being greedy, I let it sit in there and lost it again. I'm so mad.
When you learn that the patterns always give it away. When you should pull out. Always. Oof. 9 times out of 10. So we're definitely gonna go over that.
Yeah. Please. We're gonna have to go over that a few times, and you got to go over it slow with me because I think due to the AMC stuff, I'm suffering PTSD when I'm seeing this bar.
We'll have to get that AFC money back with this day trading.
You guys are on fire tonight.
Oh my God.
It's hard. FOMO is so real.
Yes.
It's so hard because you're there. You're like, damn, you're counting your money. You can't see the money you're gonna make or the money you want. You just gotta jump back in. So we're gonna go over that. Well, let's add that up, and then anything else that anybody wants. So it's gonna be the algorithm next week. That 15-minute chart, the 15-minute day trading or swing trading, and then anything else that anybody wants to go over. Will,
how many computers I need in my room?
That's how you feel. No, that's how you feel when you're doing that day trading. You feel like you need multiple computers all over.
Nah, but for real, you should see Rel's setup. Rel has 16 computers.
Oh man.
It's only 3.
One computer for each bar that show it. Like, you got a computer for each bar that show it.
Like. Then he start dragging stuff from one computer to the other. He's like, wait, what you just do there? Wait, how you do that? You start looking at the other computer.
This is fun, y'all. This is fun, man. This is good.
Oh man.
Growing, So let's
Yeah.
keep it going, man. We're gonna get that. Will and I gonna get that agenda for next week together. And if it's anything else, like let's just really try to engage each other and push each other and stay accountable. And Trace,
Yeah.
we gotta get you revved up, Trace.
Yeah.
Man, I'm so behind.
Nah, it's all good.
You in it. You in
Yeah,
it.
for the
You ain't
comfort.
behind. You in it.
Yeah.
Well,
Thank
good
you.
stuff, folks. Rob, Kev, thanks for bringing in new energy. And listen,
Of course, it's gonna be here every week. Every week, he's here.
That's right.
Yo, yes, every week. Yes, see, I'm out right now and I'm still tuned in. I'm at Benihana's right now.
Appreciate the love.
So much.
Catch a shrimp.
What?
I already see how Will gonna be in
I'm almost
class.
finished.
All right.
I'm almost finished. Go put your slippers on. You just took a
Oh,
bath.
man. All right, guys. All right. See you
Okay.
later.
All right,
Bye.
man. Everybody
Okay,
have a
good night,
night.
everybody.
Good night,
All right,
everybody.
night.